Welcome to Strategy Saturday. I'm Charles Carillo, and today we're diving into the disadvantages of the BRRRR investing method, the parts no one talks about, but every investor needs to hear. And this strategy may seem straightforward on paper, but a few pitfalls await investors who don't examine the strategy closely enough. So let's get started. So over the past decade, the BRRRR real estate investing strategy has gained widespread popularity, and BRRRR stands for buy, rehab, rent, refinance, and repeat. While it offers investors the ability to grow real estate portfolio quickly than just saving up and buying rentals, it comes with some disadvantages and risks that most gurus who tout the investment method fail to mention. So BRRRR is a 5-step real estate investing strategy that allows investors to recycle their original investment into future properties when executed correctly. Investors buy an undervalued property with debt, typically hard money, renovate it, rent it out, refinance it with longer term debt, extracting their initial investment, and then repeat the process with another property. So some of the drawbacks of the BRRRR investment strategy that I see include: number one, investors need to purchase a deeply undervalued property. Slightly discounted properties or properties requiring minor renovations might not create enough value for a total cash out refinance. And this goes exact opposite of what I suggest new investors do, which is buy a lightly value add property or a property needing a little bit of work so that you can easily get it back online. You don't have to go any like project management or huge contractor renovations, anything like this, and then save these deeply undervalued properties for several deals down the road when you have a team, when you have some handymen, some contractors that are really good, and you can actually get accurate estimating from what you know already in the business. Number two is a large initial cash investment. Traditional real estate investing, the buyer must make a sizable upfront investment. This is unlike house hacking, where an investor can purchase with a minimal down payment. Number three is the short-term initial mortgage. Here's where the real risk starts. With deeply discounted properties, the only financing solution is typically private money or hard money, and there's a reason why it's called hard money. These loans have double-digit rates, hefty upfront fees, points upfront, short terms, and sizable penalties. If you need an extension, there's a penalty for that. And these loan programs are not for the faint of heart. You really have to know what you're doing to get one of these loans. Number four is renovation budgets. Project management overruns. Accurately estimating a construction or renovation project is very difficult, even for experienced investors. That's why you have experienced investors, they're always having reserve funds. And you just don't know everything until you start rehabbing a property. You can protect against this by padding the contractor's bids, which you should do, and having a sizable reserve fund, which I just talked about, which you should also have. But there are always unknowns. Additionally, a successful BRRRRs, they require constant project oversight by the investor, which can be a sizable time commitment. It's doubtful on your first BRRRR that you're going to be able to have a project manager you're going to be able to pay to do this. And number five is renting. Once the property is complete, and the investor must now rent the property for monthly mortgage amount, or they will be coming out of pocket every month to cover the mortgage. Furthermore, let's not forget about the property management and the repair costs for maintaining the property. Number six is market risks and refinancing complexities. The most unknown in this whole strategy comes during the refinance, since investors are unaware of what to expect. If the market shifts during your renovations, or financing standards change, or interest rates change, like say you bought a property to do this strategy in February of 2022, and then it was ready for September 2022, a lot of financing just changed during that, and your numbers probably don't work anymore. Moreover, you must pay off your first mortgage usually within a year, since some refinancing lenders have a seasoning period, usually 3 to 12 months before refinancing. So it means that you need to, and that refinancing starts when that tenant goes in there. So it means you usually, with hard money, you have 1 year, and they have no prepayment penalty because they want their money back as fast as possible. So you go through this period, you renovate it takes you 3 months, let's just say, and then you've got to get it all set. You got to rent it out. So maybe you're 6 months in, then you've got to season it. That's what your lender's requiring. You're getting really close. Now you got to refinance it too. So now you're getting really close to that 1 year before you have to go back to your hard money lender and ask for some sort of extension. And it doesn't give you much time for mistakes or delays. And if appraised value falls short, the investor may need to come out of pocket to refinance or receive less of its initial capital back at closing. Additionally, for the BRRRR method to work in most situations, it is implied that the investor over leverages their property when they refinance it to extract every dollar from the property. Now, you might say most banks and lenders, they won't refinance over 70, 80, 85%. True, but you're still pushing it to the max leverage on that. So that means that maybe it's not 100% leveraged. The thing though is that for you to get out, you have to get every penny out from that lender. And this does not provide any buffer for the investor. Hopefully the investor will come away with most of their initial capital back, but they now have an over leveraged property that probably only minimally cash flows, since is leveraged to the max, and when property management and repairs are factored in, this could come out of the investor's pocket. And if you want to learn more about avoiding over-leveraging, you can check out episode SS185. That's SS185. So the BRRRR investment strategy can work great for experienced investors with deep knowledge of their market, estimating, renovation, project management, and property management. Still, BRRRR can put many inexperienced investors over their heads pretty quickly, especially with cost overruns and market pullbacks. So I hope you enjoyed. Please remember to rate, review, subscribe, send me comments on potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is at syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.